Now that the oil markets have done a full round trip in the last 24 hours, let's talk about something else. And let's talk about the credit markets. And in context, the markets were recently spooked by the headlines coming from BlackRock's HPS fund gating withdrawals. The investors had asked for a bit over 9%, but they got gated out at 5%. Uh, Obviously, the BlackRock stock was down close to 7%, and the peers were down similarly 5 to 6%. But let's take a step back and let's look at the credit markets and bonds first. Spreads have widened. There is no doubt about that, but it's not indiscriminate. We've seen high yield and investment grade both widen, but high yield has widened a lot more. So the credit markets have been discerning. There's a very clear flight to quality. And then let's talk about private credit, right? It's a 1.8 trillion industry, by some estimates 3 trillion, and a quarter of that is to software. And sure, there is stress, SaaS in particular. And we've talked about that, the stress from AI disruption. And of course, combine that with peak valuations, collateral erosion, the stress is real, and it's the first real stress test for the private credit market. But remember, it doesn't matter whether it's a bank lending or private credit, it's a lending business, right? So credit losses will happen. And that's the reason why you get paid above the odds. Private credit will often earn SOFR plus 500 to 700 basis points. And so the question is, are these losses part of the expectation? Are they priced in? And then why do investors own private credit in the first place, right? They get uncorrelated returns, you get lower volatility, and you get an inflation hedge inbuilt through floating rates. And you have often covenants that the public markets will not have. So then the question is, why do you need the gating? And the view that we take is that gating is a feature, it's not a bug. You cannot have daily or monthly liquidity on a product that's lending to 5-year illiquid loans. And I think that's important to remember, that if you did not have the gates, you're going to have forced selling into an illiquid underlying, which is going to mean fire sale prices, and it's going to hurt particularly the remaining investors. So gates are designed to protect everyone. Yes, they pain, but they're there for a purpose. And so the balanced view is that private credit isn't broken. It's being tested, and well underwritten funds are going to be just fine. But then if you needed daily or monthly liquidity in the first place, this was probably never the right product. Remember, gates are a feature, not a bug in this space. This is Sunil Garg from Kenai and Lighthouse Canton.